Hey everybody, what's going on? Fabian Calvo, founder and president of the Node House, also creator of the Resourceful Real Estate Academy. And one of the things we talk a lot about on this channel that I do with my newsletter, by the way, if you want to receive my real estate related newsletter, basically everything from how to become a better investor, whether you're just starting out or whether you are, you've been doing it for a while. I know hundreds and hundreds of you have already signed up, and if you haven't yet, or if you're new to the channel, just go to the nodehouse.us, upper right-hand corner. I also send you out some really cool content that will help you become a better real estate investor, take advantage of just another asset class that I think that we can become experts in and try to seize the opportunity while there's still an opportunity to be seized. But in this video, I want to talk to you about market manipulation, because we know market manipulation is happening everywhere, and it's something that is so just obvious. You know, the last couple of weeks I've been on a bunch of different radio programs across the country, from Colorado to Miami. I was on a radio station today in Detroit. They bring me on often to talk about the real estate market, as you know, in my expert opinion. And many times the hosts really are thinking that it's like this great recovery in housing. And you know, this new Time magazine piece that came out that talks about the real estate revival. And then they kind of bring me on, and I'm like, well, you know, don't want to really be Mr. Doom and Gloom here. I mean, you know, don't get me wrong. Actually, Mr. Doom and Gloom, Mark Faber, thinks real estate's a great opportunity right now, as do Gerald Celente and some other other forecasters. But I'm getting a little ahead of myself. The point is that people think there's a lot of good things happening in the market. There's great opportunity for people that know what's going on, but it's important that any investor or anyone participating in this market knows it's all about the market manipulation. Now, some evidence of market manipulation, I think I should start probably with something we've talked a lot about on this channel, the Libor rate, right? It's only $800 trillion of global contracts. So, I mean, what do you say? If you're going to manipulate that, don't you think they're going to manipulate the housing market in America or the gold and silver markets? Of course they are. They've been caught doing it already. And they've been caught doing it to benefit financially. This was the big banks. This is what the big interest rate that banks charge, manipulating $800 trillion in global contracts. Another example of market manipulation. The President's Working Group on Financial Markets. Now, doesn't that just sound so sweet? I mean, the President has his own working group on financial markets. My God, that can't be bad, right? Actually, it is. It's the Plunge Protection team, as you might know it. So, you know, historically, when there's been a huge stock market sell-off, or when there's kind of like a bad, you know, negative outlook by investors, the Plunge Protection team, also known as the President Working Group on Financial Markets, they come in and they buy stock futures. Many people say that they actually buy stocks or the Dow Jones and prop up the market, manipulating it so that other investors, the mom and pops, they're like, look, honey, stock market's up 100 points. You know, our 401k is doing much better. You know, that's basically what they do. And of course, number three, the biggest manipulator of all is, of course, the Federal Reserve. I added here the rating agencies as well, but Ben Bernanke has interest rates at 0%. How long can that go on? Well, I'm forecasting, and as I've told you many times, it's going to go on until there is some kind of currency crisis or bond crisis. Raising rates in this environment means basically the destruction of the U.S. economy. They can't raise rates when you have a government debt that is approaching $17 trillion and unfunded liabilities that total over $100 trillion. Okay? They can't debt service it. If you raise interest rates just 1 point, it would take the $400 billion roughly in government debt service to nearly $1 trillion a year. That would be one stimulus package a year, simply on government debt, servicing the government debt. Clearly unsustainable. People like Jim Rogers talk about how it'll never be paid off, and of course it will never be paid off. So I added rating agencies as well, because I'm going to now break down how housing is being manipulated, because it's important. Housing is such a huge factor of the economy. It's important that people that want to invest, people that are, you know, interested in you know, just knowing the truth, right, as you're kind of like looking through all this other garbage that's out there, that they realize that the rating agencies that claim subprime loans were AAA and they sold it to other banks around the country, they're the same rating agencies like Egan-Jones or Standard & Poor's that are being either shut down, as Egan-Jones was for 18 months, being barred from being able to basically comment on government debt, just like Standard & Poor's, who's now being sued or will be sued by the Department of Justice. These rating agencies are scared to death to really speak the truth about the housing market. And what is the truth about the housing market? Well, housing manipulation, just to go over some of the facts. Record low inventory. Wow, that must be good, right? Inventory's at an 11-year low. I look at that, I'm like, holy crap, real estate, it must be the place to be. That's fantastic. Well, why is that happening? There's a lot of reasons that's happening. I could give you probably half a dozen different examples. One is the banks are holding back on releasing all of the inventory to the market. They know if they release it all, prices would plunge. And there are tens of millions of shadow inventory out there. CoreLogic, which is a site that a lot of banksters and a lot of other people look to for information, they claim the shadow inventory is only 1.5 million homes out there. Well, that's a bunch of bullcrap, because I can tell you it is in the multi-millions that are out there. In fact, I was speaking to a friend of mine in Las Vegas the other day. In the neighborhood that I used to live when I grew up in Las Vegas, there are only around 300 homes in that particular area. 38 of them are sitting vacant. Only 2 have signs put up for sale signs. The rest of them are being held off. They're only, they're basically releasing them only so much. So that's why inventory is low. They're reducing the demand, the supply, and then increasing the demand by not only this second category, which is, well, actually, there's another one. I'll get to that second category. The record buyers that are coming in, the cash buyers, which make up a big section of the market, but also the no money down loans are back. FHA giving out 3% down loans. That's only going to increase. Okay, so they're reducing the inventory. They're going to start to flood the market with cheap credit, and that's going to really begin to prop up asset prices, in my opinion. Now, currently, so to get the big picture, there are over 10 million homes that are underwater. 10 million underwater loans. If you think of low equity or no equity as a potential sign of default, the Federal Reserve's own study says that if you take every single loan in America that has a mortgage in it, every single one, right? Every single property that has a mortgage, 97% of that is debt, only 3% of that is equity. That is a staggering figure they don't want you to know about. Lastly, commercial loans. In the next 5 years, actually starting in 2012 to 2017, over $1 trillion of commercial loans are coming due. It's estimated at least half of those loans are underwater. Most of them were originated around 06, 07. Commercial loans tend to be short-term. Those borrowers will never be able to pay back that loan. It's going to be more losses for the bank. So this is the truth about housing. Here's another truth about housing, is the cash buyers. Now, I will say many of these cash buyers are mom and pops, might have 100 grand in the bank, a couple hundred grand. They don't trust the stock market. They're a little bit more sophisticated. They're like, I'll buy a piece of property, I'll rent it out, I'll make a 7 to 10% yield. That's much better than losing money with inflation in my savings account or CD. But in many markets, Phoenix, Orlando, parts of Florida, 70% of the market are cash buyers, right? Big institutional buyers like, BlackRock or, John Paulson, that likely get cheap money from the Fed to come in and buy residential real estate where they borrow at, let's say, 1%. Then they can turn around, rent properties out at 7 to 10%. So it's another racket of, basically they have their buddies that give them cheap money. They go and buy residential. I'll tell you what, all these cash buyers that are buying real estate right now, I've spoken to many of them. I've met them at conferences. All of them are waiting for the inflation to take off like crazy so they can sell all their assets off to who? The people that get in at the very end of the Ponzi scheme that are basically wiped out. I'm trying to teach you how to not be one of those people. Get in and out. Don't take on the risk. This market has 2 to 4 years, in my opinion, of asset prices going up. And the people that get in at the bottom will be wiped out because these cash buyers that make up 50 to 70% of total sales will be getting out when the market begins to go buck wild, and it will. All right, number 4. Number 4 is foreclosures, another way they manipulate the market. In states like Florida, New Jersey, New York City, or New York, you take 2 to 4 years to foreclose on the property. 2 to 4 years. In Florida alone, 20% of all homes are in foreclosure. 20%. Factor in 2 to 4 years for that inventory to come online. That is a tremendous manipulation. of the market, although that's been set up legally, many of the big banks are holding off on the foreclosures, trying to sell their assets. Their hope is that in 3 years, when they finally take these properties back, prices will be much higher, and then they can sell the asset at that point. I mean, many of these properties are so underwater. I mean, they owe 100 grand on homes that are worth 30 grand. And, you know, for those of you that may live in other parts of the country, other parts of the world, in the Southeast, it's pretty typical to be able to buy a home for $20,000, $30,000, $40,000, $50,000. That's a little decent house. In fact, a lot of the sales are like that. Number 5, we're almost finished, Fannie Mae. Fannie Mae, who has, you know, they claim it's only like 1.5 million properties. If you believe those numbers, well, then you believe that they didn't manipulate the Libor rate. The president's working group is not the Plunge Protection team, and you believe the Federal Reserve is not manipulating the currency or interest rates. But I don't believe any of that. They have millions of properties that they own, and instead of selling those, they're using your taxpayer dollars to fix them up and create a rental program where guess who makes the money? Well, not the people. Yes, the government makes the money. And that is the REO rental program that they released, or they piloted not too long ago. In fact, many of the properties that they're selling to these cash buyers, they're selling leased out, already producing income. And then the last, of course, is the bailouts. The bailouts continue. This is the only reason many of these banks can hold these assets on their balance sheets, is because of the cheap money from the Federal Reserve. Take the B of A that just got a sweetheart bailout of just millions and millions of dollars, billions in legal. Basically, they you know, with all these loans that they made, all these loans that they took on, where there was like shady paperwork, they were exposed to billions of dollars in lawsuits. And the Fed said, you know what, we're going to make all those go away. They basically did another backdoor bailout of Bank of America. The FDIC is constantly backdoor bailout, constantly backdoor bailing out the big banks or the regional banks by giving them this loss share agreement where they profit off foreclosures and short sales at taxpayer expense. So all of this is the truth about the manipulation in the housing market. The truth is a real market functions where if there's supply, well, there's a lot of supply, right? And, that makes prices fall until there's enough demand, and the demand starts picking up. All this is manipulation. Now, I just want to tell you the truth about the marketplace because I'm on the front lines of it every day. Just like all these markets, right? People making money in the stock market. There's people that are making money, trading currency and betting against currency. George Soros' fund made over $1 billion, I think, in like the last few months. So people monetize the manipulation. They just know what's going on. It's important that you know what's going on if you're interested in investing in any of these asset classes. But also if you're interested in investing in housing, you need to know what's happening so you're educated, you're ahead of the curve. Because I will guarantee that in 2 to 4 years, as more of these cash buyers begin to buy and gobble up all these properties, the Federal Reserve keeps rates at zero, asset prices continue to go up, these cash buyers will get out. These are institutions that are not long-term real estate funds, okay? They're people that buy everything, they're opportunity funds, right? When the opportunity's over, they will sell to the last guy that will be caught holding the bag, just like we saw in the last bubble. Anyways, I hope this information has served you, that it's been insightful. If you enjoyed, please subscribe to my video. Also remember the notehouse.us. You can subscribe to my newsletter. And lastly, this week, I'm releasing my Resourceful Real Estate Academy. If you're interested in learning more, sign up for the newsletter. I'll be sending out some great information. Thanks for watching. I'm out.